What's up, everybody? It's Johnny, and I'm back today to talk about the PPP loan. I am breaking today's video down into 3 sections. First, I will be talking about some breaking news. I'm going to talk about the PPP Flexibility Act of 2020. Then, I'm going to clarify some issues about payroll for S corporations, C corporations, and businesses that file their taxes on a Form Schedule C. And then finally, I'm going to answer some common questions about both the EIDL loan and the PPP loan. All right, so let's start with the breaking news. Yesterday, the House passed the PPP Flexibility Act. This act will make some big changes to the existing PPP loan conditions. First, the bill would extend the forgiveness period from 8 weeks to 24 weeks. This is a major change. The second change is that the bill would change the 75-25 rule to a 60-40 rule. What I mean by this is that 60% rather than 75% of the funds would need to be spent on eligible payroll costs to obtain maximum loan forgiveness. To be clear, at this point, the PPP Flexibility Act, this bill is just a proposal. It has passed the House. It will now move on to the Senate, where it is expected to pass. But time will tell. We have to wait and see. I will keep you all updated after the bill is reviewed in the Senate. Okay, so the second part of this video. Next, I want to talk about a big component of the PPP loan. I'm talking about payroll costs. Eligible payroll costs are a major component of obtaining loan forgiveness. At this point, I am sure that you know in order to obtain maximum loan forgiveness, at least 75% under current rules of your PPP funds must be used on eligible payroll costs. But are you sure what is exactly considered payroll costs? Some businesses write personal checks to themselves or transfer business funds into a personal account. Are these transactions considered payroll? Based on these questions, it is very important to distinguish what exactly is considered payroll, okay, for the PPP loan forgiveness. Based on how your company is structured and files taxes, you need to know how the decisions you make impact your payroll calculation. When it comes time to apply for PPP forgiveness, you will need to know what your payroll costs were. This video is intended to help you clearly understand what types of transactions are payroll and what types of transactions are not considered payroll. All right, before I get any further into this video, I need to make sure that we are clear and I provide a disclaimer. I am a CPA, but for the purposes of this video, I am not your CPA. Always consult with your own CPA or tax and legal professional when making decisions that impact you. Each specific case is unique. This video will hopefully provide you with information that will help you feel more confident about what is going on with the PPP loan, but this video is not tax, accounting, or legal advice. First, let's talk about S corporations. Let's start with the basics of how S corporations and taxes work. You have the S corporation and you have yourself as the owner. 2 separate pieces. The S corporation itself does not pay income tax. As an S corporation, your income flows through to your personal return through the form of a K-1 and is taxed at your personal income tax rate. Let's use an example. Let's say I have my own business, Johnny S Corp. If I write a check to myself, Johnny Reliable, for $100 or transfer money from the business account of Johnny S Corp to my personal account, Johnny Reliable, this is called an owner draw. Owner draws are not included as payroll costs. This is very important to understand. S corporation owner draws are not taxable. So you may be saying to yourself, why don't S Corp owners only take draws from their businesses? Well, to make sure S Corp owners do not take advantage of taking non-taxable draws from the business, it is a requirement of S corporations to take what is called a reasonable compensation, or taking a reasonable compensation through payroll. This payroll, subject to payroll tax, is considered payroll costs for PPP loan forgiveness. Payroll with taxes withheld and remitted are considered payroll costs. These expenses are usually reported through a payroll company or through your CPA. So, in conclusion, payroll with taxes withheld are payroll costs. Draws from the business are not considered payroll costs. Next, let's move on to those who own businesses that file taxes on a Form Schedule C. As always, let's start with the basics. In this situation, again, the business itself does not pay taxes. The tax liability of the business passes on to the business owner on the Form Schedule C of the business owner's personal tax return. The members of this type of business, the owners, are considered to be self-employed through the business, so they pay self-employment tax on these earnings. Let's now dive into determining payroll for the PPP loan as the owner of a business that is taxed through your personal tax return on a Form Schedule C. Your payroll cost is the earnings that you are taxed on. This is the full amount of the net profit. To be clear, this is not owner draws. It is possible you may have withdrawn less than your profit, all of your profit, or more than your profit. Your self-employment tax is based on your net profit. If you are the sole owner of a business that reports income and expenses of that business on a Form Schedule C of your personal return, your salary for the PPP should be the amount of the business's net profit in 2019. You should not include any draws in that calculation. Please note, recent understanding is that some costs are disallowed under the forgiveness calculation, such as health insurance and retirement for single-member businesses that file their taxes on the Schedule C of their personal return. Remember, this is a very complicated issue, so please consult with your accountant, as this is very important to understand. Alright, next let's move on to C corporations. C corporations itself, the business itself, pays taxes on the net profits of the business, and the owner also pays taxes on dividends and payroll taken from that profit. If you are the owner of a C corporation and you take draws from the C corporation, this money is considered a loan from the business that you will repay. A draw from a C corporation is not considered payroll. The payroll costs for the owner of a C corporation are limited to the wages that you are taxed on. Please see your 2019 W-2 form from the business. This is the amount you paid yourself through payroll in 2019. This does not include loans or draws because you are not subject to any payroll or self-employment tax on those specific transactions. Okay, so now at this point, I hope you have a better understanding of what payroll costs, what is a payroll cost, what isn't a payroll cost, depending on what your business structure is and how your business is taxed. The next area I want to address in this video are some common questions related to the EIDL loan and the PPP loan. As I mentioned before, I am a small business owner and many of my clients have received the grant for the EIDL loan and they have also received the PPP funding. The first question I want to address is how the EIDL grant money impacts PPP loan forgiveness. Okay guys, as always, I always like to bring the whiteboard out to give an example. So based on that question I just talked about, we're going to talk about how the EIDL advance, the grant, impacts the PPP forgiveness. So I'm not talking about the EIDL funding. I'm talking about when you filed the application, there was a section where you could request a grant. And this is $1,000 per employee. Okay, that's what I'm specifically referring to, not the EIDL funding as a whole. So in this example, let's say that my own business, we'll use my own business as a hypothetical example here. I received an EIDL grant of $5,000. Okay, I received PPP funding of $25,000. The maximum PPP loan forgiveness that I can obtain based on these numbers is $20,000. The $25,000 in PPP funding less the $5,000 in the grant, okay? In the EIDL grant, okay? But here's what's very important. Under the current rules, okay, the 75-25 rule, you're going to base that off of the total PPP funding, not the forgiveness, okay? So 75% of $25,000 is $18,750, and 25% of $25,000 is $6,250 for a total of $25,000. Now, as I mentioned in the breaking news in the first part of this video, there is the PPP Flexibility Act, which hopefully will pass the Senate, which would change the 75-25 rule to a 60-40 rule. All right, but until that is official, I'm going to continue using examples with the 75-25 rule. I hope this brings some clarity on this issue. The next question I'd like to address are how should you use the EIDL funds and the PPP funds? The easiest way, I believe, to answer that question is the following. I suggest you use the PPP funds for eligible costs such as payroll, mortgage interest, rent, and utilities. I suggest you use the EIDL funds as needed for anything else to operate your business. Except, please note, the EIDL funds are not intended to be used for equipment, expansion, or debt refinance. Remember, the EIDL loan is a 30-year term at 3.75% interest, 2.75% for nonprofits, with a 1-year deferment period. And okay, the last question that I've been getting in regards to the EIDL and the PPP loan is this. Should I set up a separate accounting system for the EIDL and the PPP? Yes. Please maintain clear and detailed records for all activity for these programs. Contact your accountant to help you set up a system in your chart of accounts to track the activity for the EIDL loan and the PPP loan separately. Maintain records and stay organized. At this point, video is over. I want to thank you all so much for watching. Please stay healthy, stay sane, and I cannot wait to see you all soon.